Hello everyone, this is Dr. Mahmoud Al-Odeh. In this video, I'll be talking about Chapter 6, Project Life Cycle. Now, what we need to do, in the last chapter, we did talk about the project cost management life cycle, which what the phases that you need to manage, just the cost for project. But this one, we'll take a look into the project life cycle itself. Managing a project should go through 5 important phases. And these phases, following these phases, will help you to ensure the successful of finishing the project within the time and the approved budget. These phases are called the project management life cycle, and we need to follow these to achieve the goal and use the resources that assigned to us. So these phases are, as you see in this chart, the initiation phase. Now, the second phase would be the project planning phase, and then project execution phase, and then the fourth one is the project monitoring and control phase, and the last phase would be the project closeout phase. Let's go ahead and start with the first phase, which is the initiation phase. For this project is officially the project formally has started, named and defined in broadly, of course, not a lot of details, but we look into that this is the kickoff for the project. This is the start for the project. What you need to project sponsors, investors, and other stakeholders who might be interested in this project should decide whether or not to commit to this project. Several techniques can be used to help sponsors and investors to make their decision to select a project. Now, moving into that, decisions can be made based on a financial or non-financial measures. Financial measure could include the payback period, the rate of return, the rate of investment, profit margin, the net present value. We did discuss that and we covered it in previous chapters. However, also the non-financial measures can be used as a way to decide whether to go with this project or not. Non-financial measure would be commitment to development local communities, building a reputation for the company, or maybe environmental practices that you want to practice to remove any harmful practices that you have on the environment. And what you need to do, maybe as a project manager, you need to prepare feasibility study that you need to look into the requirements, number of alternatives, the risk, and the project complexity. So you might be asked to do a feasibility study. Now, the first thing that you will need to do in this phase is to create the project charter. What is the project charter? It's a document that you will have to fill and develop, and you in that document you will include the information about the project, such as the scope of the project, objectives, the problem statement, timeline, milestones for the project, sponsors, and stakeholders. So it's just gonna give you the idea on what the projects that are needed for what are the objectives of your project and who are in charge of your project and what is the project problem statement is. This document is important because it states all the baseline needs of the project to get all approval before creating a more detailed project plan. Project planning phase. So now we're moving into the planning phase. In this phase, a project manager should develop a comprehensive to include detailed information on what? Cost. We need to look into the cost, the scope, the duration, the quality, the communication, risk, and resources. These are the things that we should look at it when we develop the project. This phase includes creating the work breakdown structure, developing the schedule, highlight milestones, activities, creating the Gantt chart, estimated and reserving resources. That's going to be a very detailed phase. We need to look into all the details, cost, the resources, the schedule, milestones, and other things. Project managers should use several strategies to communicate with the stakeholders based on the milestone, deadlines, and important deliveries. These communications strategies could be face-to-face, could be by email, could be written, could be by phone, could be by video conference, etc. So they have to make sure that the stakeholders are aware of where you are from the planning, how you're going to plan, what's needed. and all the requirements. Risk management plan is another document that is important in this phase, where you need to make sure that you create it and make sure that it's available. Whenever you have a risk, you should pull out that document and deal with it and create. And this document is basically including the risk management plan, because it will help you to identify and analyze potential risk and develop mitigation plan to respond to any risk. 8 key elements should be included in a project plan. Okay, what are these elements? These are the goals, the success metrics, which is the performance measures, which is the KPI, the key performance indicators, stakeholders and the role for each one, scope and budget, milestones and deliverables, timeline and schedule, risk management plan, and communication plan. All this should be included in the planning phase. Now moving into the execution phase, where you actually you implement and you execute the plan for your project. Following the project plan that you created in the previous phase, it is now time to implement and execute the activities. And what you need to do in order to implement the phase, you should collect several project management through the execution phase. So this is what you need to do. Over implementing this project, you need to collect the measures to benchmark your performance, to evaluate your performance. These measures, also called the key performance indicators, the KPI, which help you to create performance report on financial, productivity, scheduled performance to share with key stakeholders. These measures also can keep the managers informed of human resources needed or any resources needed. So these are important to for your evaluating yourself. Are you on budget? Are you on schedule? Do you need more workers and things like this? Do you need more money, basically, and things like this? So these are called measurable objectives, or the key performance indicators. And in the next phase, which is the monitoring and controlling phase, what you have to do, you implement it at the same time with the execution phase. So and you use the key performance indicators that we collected during the project to monitor and control phase. The results are compared to the target. So, okay, well, let's say after 5 weeks, we spent $10,000. Let's take a look into the document. Are we supposed to spend $10,000? If yes, we're good. If we exceeded that amount, then we have to slow down on spendings and make sure to have some risk plan. So what you need to look into the variation and see if there's a variation. You have to have a corrective actions that suggested to keep a project on a track, and this will help you to of course, prevent project from failing. And as you project manager, you should consider that the project are likely to fail. This is what one of the strategies is saying. Okay, well, let's consider that the worst case scenario, and we consider that this project will fail. So what should I do to make it successful? This will help you to better prepare for your project and make sure that you're not going to fail your project. Now the last phase, which is the closure phase. Now we're done with the project. It is formally finished and closed. What you need to do, there are few responsibilities as a project manager you have to do, which is delivering the project, relieving the resources. So we're done with these resources, we're returning back, celebrating with your team and celebrating their achievements and rewarding them, and termination of contractors if you have any contractors. Also, what you have to do maybe is reflecting a meeting with your team members to help you learn from successes and failures during the project implementation. And this is one of the effective and continuous improvement strategies that we use to improve the overall future of productivity, the overall team's productivity. And the final task in this phase is to write a detailed report that covers every aspect of the project, of the complete project. So basically, you document the phases of the project. All data and information should be stored securely so the organization and project manager could use it in a future project to monitor and to do the cost estimating and budgeting. Now, the last two things that we need to conclude this chapter with is selecting the method for selecting projects. Sometimes we're not sure how we select project. There are so many of them, but there are at least two strategies. One is called the net present value, which is considering the time value of money, and we need to make sure whether the project is financially viable or not. And there's some calculation that is listed here. This is the equation to calculate the net present value, which is basically calculating the converting the future cash flows into a present cash flow and add them together, considering the interest rate. This is where you divide it by 1 plus K. However, this is an old technique, and this is the base of the net present value. What we need to do, we need to use the function on Excel spreadsheet called net present value, the NPV. So in this example, I want to share with you how we could develop a net present value. So we have this construction company in Nashville, Tennessee. They would like to choose between project A or project B. They have these information. Initial cost for project A is 700 and project B is 400. And what we need to do, we need to choose one of them. We know that the annual income for project A is 225, project B is 110,000. We need to conduct the NPV for 5 years with an interest rate of 15%. So the first thing that you want to do is build your cash flow. So we have project A for 5 years. This is what is called the cash flow table. On the first year, year zero, you have a negative 700. This is what you get. And then for year one, you will receive a positive. This is negative because you invested in it. And positive because this is the income, 225,000 over the 5 years. And then what you want to do is to consider using the NPV function. So you see, you start with the equal C7, which is right here, C7, which is the negative 700, plus the NPV function using 5% interest rate, that's the B6, which is 15%, and select the 225 from year one all the way to year 5, and that will give you 425,000 as the net present value for this project. Now we're going to do the same thing for project B. So we listed 400 as the initial cost, negative 400, and then we listed down the 110 over the next 5 years. And we did calculate the net present value using the NPV function, 15%, and we selected the values from year one all the way to year 5. And we included the year zero, which is the negative 5 or negative 400. And now the net present value would be $150,000. And looking compare into the two values together, the 425 versus the 150, you will find the project A has a greater net present value. Therefore, we should go with a project A. Now, another techniques to select project called multi-weighted scoring model, where you it's very helpful and simple techniques that we use to avoid any personal influence on selecting a project. This technique also used in supply chain and different management fields, operations management. What you need to do, you have to assign several weights and criteria to evaluate the project. And then once you list all these criteria, you assign a weight for each one of these criteria, and then you show the importance, which one is the importance for you, and you evaluate the project based on each of these criteria. So let's take a look into this example. That might be even more helpful to help you understand this criteria. So we have N projects from 1 all the way to N. We've selected stay within core competencies, strategic fit, urgency, etc. So these are the criteria. And this is what the criteria, how important these criteria on scale 1 to 5. So for example, stay within the core competency, it's 2 out of 5. Strategic fit, that's 3 out of 5. Urgency 2. Not important, rate of ROI, the rate of return to be 18% or more, that's 3%. So that's 3 out of 5. And now we'll go to project one. We say, okay, how this project according to this criteria on a scale of 1 to 5. So we say, well, that's, or scale 1 to 10, actually. Here we use scale 1 to 10. That would be one. This is not really staying with the core competencies. This is not our specialization, so it should be 1. Strategic fit, yes, that's actually, it might fit our strategic plan, so I'm going to give it 8 out of 10. Urgency, how urgent is that's 2. So this is where not really urgent. 25% of sales from new products, that would be 6 out of 10. Reduce defects, this is not going to help us produce defects, so I'm going to give it 0 out of 10, and so on. And now then what you do, you multiply 2 times 1 and add to that 3 plus 3 times 8 plus 2 times 2 plus 2.5 times 6, and that will give you 66 as the way to evaluate as the net score, the total score for that project. And you do that project by project, and you will look into the highest score. You will see project 5 has the highest score, so project 5 should be selected, and this is the project that we need to go ahead and implement. I will try to make an Excel video, a video using Excel sheet to show you exactly how you could select this project based on this strategy. But that's the end of the chapter. Thank you very much. I hope this is helpful. Please let me know if you have any question. Thank you.